India's services PMI inched upwards to 47.1 in October, as the country's infrastructure output currently sits at its highest level in years. But with a currency on the decline and an imminent IMF visit, what does the future hold for the Indian economy? Sonam Udasi of IDBI Capital Markets is on the phone with me now. Sonam, how does today's positive PMI figure line up with the more negative news of late that India has in fact dropped to number 106 on the Prosperity Index?
Yeah, I think it's more a reflection of the PMI data is a monthly figure that keeps coming in, and it's a marginal improvement if you see. So while it's welcome, the Prosperity Index would probably be more longer tenurish in nature and be factoring in a year of sentiment probably. So how investors are looking at this is that there's an expectation that India seems to have reached a trough on the negative data front, and investors are expecting that things will start to improve very slowly from here on. That said, on the ground, if you look at either the retail sales that have happened in the quarter, or in terms of the salary increases that people were expecting, there is a lot left to be desired. It's a reflection of the poor economic conditions. So it's, the way the RBI changed the guidance on even the GDP growth. Now they are factoring in a 4.8% kind of growth for the fiscal 2014. That's a reflection of what's the expectation on the ground in terms of growth expectation.
India's infrastructure output currently sits at its highest level in years. What relationship are we seeing between this sentiment and manufacturing? And similarly, what knock-on impact is this having on foreign direct investment into India? Are there particular industries standing out to you at present?
See, while the output number per se is looking good, that said, if you look at the IIP numbers that come out, the industrial numbers for production, or even the manufacturing component in the IIP, it leaves a lot to be desired. I mean, a lot of projects in India are stuck because of back-end, fuel linkages. A lot of power projects are stuck. Road projects are stuck because the EPC contractors currently do not have the money to finish the projects, or some of the road toll projects that were taken on, they are not viable enough. So there is still, despite the improvement on the ground, because India is such a vast country and the infrastructure need is many, not many, when you speak about foreign direct investment as well, investors are wary to, look at EPC contract plays or road projects or build-own-operate projects in India, because policy direction keeps flip-flopping and they are not sure of the IRR that the project could generate. That said, there's still a lot of interest in, say, a realty SPV project where there is a commercial or a residential aspect to it. There is an end use to it, and the foreign direct investment can come in and, the cash flow can move quickly there. Apart from that, there is some amount of interest that is slowly but surely showcasing in the retailing business, but not really manufacturing.
Sticky inflation remains an issue to central bank policymakers as they prepare for a visit from the IMF team to check India in the third week of November. Can we anticipate the IMF to encourage further RBI rate hikes, do you think?
See, the new governor had made it pretty clear that the rates are no longer going to be down. I mean, his focus was clearly inflation. I don't think that the IMF would need to do any more cajoling on the interest rate perspective. That said, it's also very clear that much of the rate hikes are somewhat done for India for the time being. And, as the quarter goes by, If the inflation remains sticky, then he may need to, take a fresh stance. But as of now, our expectation is that maybe another 25 bps for the fiscal should do it for the time being.
And lastly, Sonam, the rupee has been seen slipping back against the US dollar in this week's trading. However, market insiders are claiming this could be a positive for India's economy. Can you expand on this debate for us? And similarly, with expectations that the Indian currency is headed to the 60 to 69 levels against the US dollar, what are you forecasting for the local currency?
See, there are always two views. When the rupee was depreciating and falling against the dollar, there was a lot of hue and cry locally in terms of what it could do to the economy, and there was a lot of FI and FDI outflow during that time. A lot of foreign investors wanted to get out of Indian equities. So the focus came back to giving some stability to the rupee. Our own sense is that, once the tapering talk starts to come back, I think the globe has discounted the tapering now to March 2014 onwards. So as that talk starts nearing again for tapering, once the new Fed governor comes in, I think the rupee will again start to come under pressure because the fiscal imbalance still stares you in the face. Right now, India has got a reprieve. All emerging markets have got a reprieve because of postponement of the tapering. But that said, our own senses over the next 1 year, our forecast for the rupee would be somewhere in the range of 65.
Sonam, many thanks. I'll be back tomorrow with a closer look at Australia off the back of import-export data. So until then, goodbye.